Hi guys, and welcome back to the Ask Rhyce show where I answer your questions about real estate. Today I'm joined with Dan Dwan.
Hey Rhyce, how are you?
Good mate, how are you?
Not too bad.
Good. Dan's one of the directors and owners of Colliers International here in Toowoomba, who I work for, and I thought it'd be really great to get Dan in today to have a bit of a chat about commercial real estate. Dan's background is commercial. He looks after the commercial side of our business, but quite often I get questions from residential investors who have only ever gone through residential, and but they're always curious, and there's a bit of interest there to possibly get into some commercial in property investment. So I thought Dan would be the absolute best person to talk to.
Appreciate it, yeah.
So we're just going to pick Dan's brain today, and hopefully we can add some value and answer some questions. So Dan,
Just fingers crossed.
Yeah. So Dan, can you just give us a little bit of background on who you are and how you sort of got to here? Yeah.
Okay. Look, we kicked off Colliers 10 years ago. So Colliers obviously predominantly a commercial business, and I suppose that's where our greatest exposure is in that commercial market, nationally, internationally. So we've been running the business here for the last 10 years. Prior to that, we were independent in other agencies within Toowoomba. So I'm a Toowoomba born and bred boy. So know the market back to front. Obviously you've seen the highs and lows of what happens in the market here, but I'm family man, married, 3 kids. Attend the local schools here in town. So I'm fairly well entrenched in the Toowoomba area, mate, for sure.
And just, obviously I know you've got a bit of background in your own sort of property investment before commercial, but why did you end up in commercial?
Look, to be honest, obviously commercial is a very different game to residential, both from the investment strategy but also the sales process. It was probably more, to be honest, Rhyce, I didn't want to work weekends. So look,
if only.
Yeah, if only. So commercial, it's dealing with business people on a day-to-day basis, and I suppose some of my background prior to being in real estate, both with the police and in hospitality and those type of things, it was dealing with people in a business level, predominantly most of the time. So it was probably just the natural side, the natural way I went in real estate, and the fact that it didn't include too much weekend work was probably an advantage, because I've got young kids. And it's about that lifestyle balance, I suppose, as much as you can try and get there. But commercial was probably, it's like residential. It's the thrill of the chase. It's getting those deals done. We do the little deals, we do the big deals, and it's all those things. It just drives you, I suppose, to keep going. But it's an enjoyable space, mate. For sure.
Awesome. So on that, obviously you mentioned like some big deals there, and you guys, you do some pretty amazing stuff from us guys from residential looking in. But where I get the most questions, as I said at the start, is from residential investors who are looking at commercial. Mate, what would be like? I guess. Well, before we get to there, like why would someone look at commercial as an investment versus residential from your perspective?
Look, commercial certainly does attract higher rates of return for your investment. So if you look at the market, an average investment might be out there, let's say at $1 million. Depending on the calibre of the tenant that's in there, but you can probably expect a return that might be anywhere between 6.5%, 7%. Through to 8 to 9% return on your money. Okay,
it's a pretty substantial.
So it's obviously, when we look at the residential market, obviously you're obviously getting those lower returns. But with that higher rate of return, obviously you're taking probably a higher level of risk, so to speak. Because obviously, if you look at it from a commercial point of view, there's not as many commercial tenants out there in the market. Look at the residential market. The volume that's there. So most times you've got a single tenant in that situation. So there's a high level of risk. You lose a tenant, you lose your income for the property until such point you get another tenant through.
So you got holding costs there.
Holding costs. And look, and that's why people, I suppose, look at it from that point of view. If it's about, and we'll get to this later, is around doing the due diligence and education around the assets that you're buying and investing in, and and being prepared and managing your tenants well, which de-risks that investment moving forward. It's about strategy, and it's about knowledge around how you sort of can maintain and manage those those investments into the future. Yeah.
Yeah, and look, once you've got a tenant in place, I guess one of the key differences, from my understanding, is obviously a tenant, unlike residential, a tenant is responsible for a lot more.
In most instances, there's two, and coming down to the education side of things, we've got one way which is very similar to a residential tenancy where the landlord pays a lot of the operational costs. It's called a gross rent, and most tenants will want a gross rent because the landlord pays the insurance. If the insurance goes up, then that's the landlord's expense. The rates, all those type of maintenance costs and stuff, are consumed within that rent. One of our suggestions in a lot of our managed portfolio is that we try and position the tenants into a net rent. So what that means is basically all those operational costs, including management fees and rates, insurance, and those type of things, is actually a cost that's borne by the tenant. So the investor really knows what they're getting for their money at the end of the day. So if they've got a tenant and they're paying $100,000 a year, annually they'll get an increase on that. So it's either goes up by a CPI or a fixed increase. But they'll know very well they've got the $100,000 coming in on a yearly basis.
Makes it simple.
If rates go up, that gets passed on to the tenant. And that's probably the real difference. So you're right. I mean, there's probably a secure level of certainty, especially around the income.
Do you get? I mean, I'd never really spoken about like the gross rent example. What would be the percentage split on investments? Would majority be net?
Look, to be honest, it comes back down to the education of investors, and like residential, there's still investors in our commercial market that perhaps don't understand or know what is available to them as far as how they can position their asset. Look, from a landlord's point of view, if they're self-managing, more often than not, it's easy to have a gross rent because there's less work for the landlord. They just pay the bills. There's no sort of accountability back to the tenant. So when you're in a net rent situation, you've got to. We get audited. We audit those outgoings on an annual basis, and we effectively sit down in front of the tenant. So this is our outgoings. This is where we're spending the money that you're having to pay, and they scrutinise us as well as the owner scrutinises as well. So it's good from that point of view because we've obviously got to make sure that we're efficient with our management. We're efficient with our the expenses that are incurred by the tenant. So you're getting watched from both sides. But, So look, the split. Getting back to your question. Look, I suppose in our managed portfolio, the greater percentage are on net rents. The common rents, commonly in the market. It would probably go close 50-50 between gross rents.
And I guess that would be reflected in how much is managed by owners versus businesses like ours.
Definitely, look, that is the case. So, and look, sometimes it's just easy to have a gross rent. There's certainly instances where your outgoings or how that can be attributed, is more complicated to calculate. So it's easier to say, look, it's more equitable to go, okay, we'll keep you on a gross rent. So. It's not scrutinised as much.
So, like, just on that, to sort of tie that in, so that would be like on an investment where you've got like multiple tenancies.
Yes and no. Look, I mean, when you get to that, it's a whole new level. Basically the outgoings are apportioned across how much of that total building they occupy, and they might pay 15% of it, or they might pay 3% of it, depending on what
percentage.
Exactly.
Okay,
so
fair enough.
But look, there's definitely some benefits around. The commercial versus residential.
Definitely. So step that back a bit in terms of, I guess, more of the simple option of things. If for a property investor who's looking to be a first-time commercial property investor, so just from the, I guess, base level, like what would be your best advice for someone looking to start into that space?
Well, I think I probably touched on it before. I think education is a big play. It's understanding, what you're looking at, and coming down to things like we spoke about with net rents versus gross rents, and understanding, what your real rate of return is going to be on the investment you're looking at. So, I mean, understanding that principle, I think, is a big thing. So, educating yourself around the technical aspects of a commercial lease. And no two leases, the difficult thing is that no two leases are really the same. Each solicitor has their own format they like to stick to. They have their own terminology, they have their key terms that they are pertinent to their leases. You've got standard leases, but you're getting a bit of an understanding. So there's no it's no black and white. There's a lot of variation there. And I suppose the other thing for an investor coming through is there's probably some market knowledge around, particularly if you're buying a tenanted investment. Having some market knowledge around making sure that the rent they're paying is at market, accurate, and you know, you're not buying something that's, you know, has an inflated rent, or, you know, potentially moving forward is going to have some, you know, maybe downside as far as the rent position. You know, so it's about, it really is an education play, I think, is and the best thing is, and what we suggest to a lot of our first time investors is to, you know, monitor the market. You know, we're quite good at sending out a lot of information to some of these investors, and, you know, if there's things that they see and like, you know, give us a call, we'll talk them through it. You know, sit down like we are here at the boardroom table and going through and educating them around the difference between net and gross rents, and little things that, you know, some people, even sophisticated investors, have been in the market for a while with, you know, recovery of things like land tax. You know, so that's one of the things that, you know, gets overlooked in a lot of cases where, you know, investors can actually recover land tax out of some rents. Some leases. So you get a true net rent then, so everything's covered. And that's changed, you know, over the last, you know, 5 10 years, whatever it was that you know, was introduced.
So very much, so what I'm getting from that is very much unlike residential, where we've got very clear legislation and a tenancy, like a lease for a tenancy. It is pretty much just black and white. It's stepped out. You know what you're getting. The only real variables you've got there is obviously your outgoings, which you're responsible as the owner, and then if you had a management. Whereas commercial, it's case by case, very dependent on the tenant and the owner's situation and the solicitors that are involved.
100%, So
cool.
There's definitely no black and white.
No, that's all right. So look, I mean, we've probably sort of answered. My next question would be like, where do you see like the biggest mistakes that commercial property investors make? I'm assuming it's probably around lack of education.
Look, I mean, I think one of the pertinent things around your commercial leasing and moving forward, a lot of it comes back to, you know, probably due diligence on your tenant. And, you know, from the point of view also of making sure you've got sufficient security tied up in the lease. And by that I mean, you know, like a residential tenancy where it's a multi-unit that take 4 weeks rent as a bond. You know, it's making sure that a commercial investor has sufficient security there, that if things do start to go bad, or you've got a tenant that starts to waver in paying their rent,
which can happen. It's a reality.
It does happen. You know, it's, you know, the economy, you know, the way things have been, you
personal circumstance, whatever happens,
up and down, all those type of things, is to make sure you've got sufficient, you know, security there that protects you moving into that sort of phase, but also gives you some comfort to know you're going to get things released or back on track. You know, without, you know, for example, if we took a month's rent for a tenancy and, you know, get a tenant that actually starts to fall into arrears, well, you've got very little to fall back on. Because the processes and timelines is that you might be without income on that property for an extended period of time. So, you know, taking something with, you know, a high level of security, whether it be 3 months, 4 months, bank guarantee or cash deposit and those type of things that's held in trust. You know, it just gives you a little bit more lead time into making sure that you've got, you know, some comfort there. A lot of landlords we see probably don't put as much importance on that. You know, and it's only if they fall into that situation where they have a tenant start to fall into arrears, they go, well, hang on, maybe we should have looked at that more seriously. So that's one of the big things that's probably in some instances becomes a non-negotiable for us in the discussion with the tenant, no matter what calibre they are. I mean, it's always difficult to get to that sort of level of security out of a big corporate national tenant like some of the banks or those organisations, but it's to make sure you have that in place. You know, I think that's probably one of the biggest things we see is that, you know, it's too late. You know, when it gets to the point where they think they've got a great tenant that's got a great trading history, but the market changes or circumstances shift, you know, and they've got that situation where they're starting to lag in payments of rent, and, you know, and it gets to the point where, you know, they have to go elsewhere or you're without a tenant.
And there's nothing, as the property owner, there's nothing for you to fall back on if you haven't put that in place to start with.
And look, and that's, you know, the other thing is, you know, dealing with your tenants. It's actually having a relationship with your tenants as well. Not to the point where you're nosy and sticky beak in their business and you're in there on a weekly basis. But it's, you know, understanding where their market's at and how their business is travelling. You know, and that's one of the things in our commercial management team. The girls do a fantastic job there in their relationship with the tenant. So, you know, we can probably normally assess if there's, you know, there's some troubled times coming ahead, or there's some challenges there that we can actually work with those tenants, as opposed to find out too late. You know, when it's the administrators walk in the door and say, "Look, here's the keys." Unfortunately, things didn't work out. So,
it's all too late then.
Definitely.
Well, that's awesome. I mean, I think that's fantastic information. I guess moving on to like, I guess a really positive note. where do you see the greatest opportunity for commercial property in Toowoomba?
Look, Dan's taken real estate in Toowoomba, mate. I mean, I think our market holistically is in a really good spot. I know there's other areas of other markets that are probably experiencing flat periods. And look, there's no doubt we're in a normal market right now, is what I suggest. You've got to, very well, it's a real estate, you've got to work for the deals, and it's just getting those deals across the line. Toowoomba's very well positioned moving forward, and I think the big driver in the Toowoomba market is going to be our industrial space.
Okay.
So if you bring in all those attributes that we're dealing with in Toowoomba, second range crossing, proposed Lindown Rail, Interlink SQ with their connectivity via the Western Rail and into the Port of Brisbane, second range crossing with the connectivity with the road infrastructure. We are really well placed from a transport logistics point of view. Connectivity, the airport, all those elements of things. But you look at the percentage of fresh produce that's produced in this area, in a radius of 300 kilometres, I think it is, from Toowoomba. There's a massive percentage. So, that food processing, that manufacturing space, and it's going to be driven, by all those things we just mentioned, but also from the point of view, it's a price point. When you look at the availability of our industrial land and in comparison to other markets like, Brisbane, for example, there's some significant price differences in land content, which is we've got a lot of people starting to look seriously at this Toowoomba market from that point of view. And when you look at that space, and that starts to create further employment, bringing people into the area, bringing specialised, employees into the area, that's going to have a positive effect on our residential market. So obviously, moving forward, there's going to be a higher housing demand. That'll put some pressure on rents. So rents will start to escalate, bring the investors back into the market, and as that residential population grows, that's going to be the positive element for our retailers. We've got in excess of 40,000 square metres of retail space introduced to the Toowoomba market through the likes of Grand Central and QIC and other developments that has come on all at once. Everyone can see what's happening, but when you look at the impacts of the industrial and the residential flow on that will come from that and benefit all the other markets. So look, I mean, if industrial is an exciting space in Toowoomba at the moment. There's still plenty of activity in other areas. Retail is probably the flattest of the markets, because of what I mentioned around the volume that's come to the market. And I suppose the big thing is that at the present time, there's probably the discretionary spend isn't there to help out those retailers.
Which is I mean, that's not a Toowoomba thing. That's a national economy.
Oh, definitely.
Or global economy.
And look, coming off the back of this election period, it's probably been more significant than other periods leading to election. But if you look at it from the point of view where we're a good area to invest in. I think anywhere in Toowoomba, mate, to be honest, as far as investment-wise, whether that's residential or commercial, I see the greatest level of opportunity out of the industrial space at the moment. But remembering in that space, we're playing some pretty big numbers there as well.
Exactly right.
So it's not necessarily probably a mum and dad type investment, but I think anything there's some great little standalone commercial offices out there that are in that sort of $500,000-$600,000 price point. Again, if you're looking at the right attributes of the asset, it's rentable. You've got future opportunity there, some upside, those sort of things. They're all great areas. So I wouldn't deter anyone from investing any sector in the market.
It sounds like it. Provided you do your due diligence, it's going to be hard to make a bad decision locally, just with everything that we've got going on.
Yeah, look, definitely. There's a lot of promise and a lot of opportunity, a lot of upside in this Toowoomba market, and that's across all sectors. I see that industrial space as being the real driving force behind it. Yeah, for sure.
My final question to you, and I mean we've spoken a bit about what's to come in Toowoomba, but would be let's project this out even further. Like, what are your predictions for the future of commercial space in Toowoomba? Just to summarise what you just said then, how I would take that is we've almost got like a bit of a lag time at the moment. We're in a normal market, but we've got a heap of infrastructure, whether it's retail, commercial, industrial, like spaces, road networks. We've got a beautiful foundation.
Certainly.
What are your predictions if that all comes together? Like long term, where do you see us being?
Toowoomba's been compared to areas like Newcastle.
Okay.
So Newcastle, you wind the clock back 15, 20 years in Newcastle. very similar foundations to where Toowoomba is today. I think we've got a better story to tell than areas like that as well. But the growth of Toowoomba is going to be phenomenal. I think as far as you look at some of the projections there. There's obviously some good stable population growth, but I think the expansion of industry and industrial space here, off some of these things we're talking about, is really going to change the face of Toowoomba from that point of view. And that'll enable us to further expand what was already great foundations, like you mentioned, with the educational structure here, the health networks. You look at the connectivity and what's available to people living in this Toowoomba region. We are very spoilt. The cultural diversity that's in Toowoomba. Everything is ticking the boxes. And that's why, Rhyce, that's why people like Qantas have made a decision to come to Toowoomba and locate here at Wellcap Airport, is because it wasn't necessarily the airport that just got them here. It was all those other attributes around
Toowoomba. It's the layers.
It's definitely the education, the health, all those things that we spoke about, the livability, those type of things that has been a key reason why they've come here. And I think that's the foundations. That's just going to grow and expand. And look, who knows, if we had that crystal ball, mate, I think we'd be both very wealthy young gentlemen. You're younger than me, but look, I think it's a great place to be. Exciting times. I think what better place to be in real estate, from our point of view, than somewhere like Toowoomba that's got such a great story to tell around, and so many positive elements around what's coming to this region.
No, I agree. I think we are very spoilt in Toowoomba, and like, just on top of the livability side of things, like just affordability. I think the price point that we've got here, let alone the connections and the foundations that are being laid at the moment or have been laid in the past, I think we're very, very spoiled.
Oh, it's a wonderful spot,
Well, Dan, we might wrap it up there. Guys, I really hope that helped and gave you some sort of an insight into commercial real estate. If you haven't had any exposure to it and you're interested in that space, Dan is a fantastic resource. So lovely, absolute pleasure to talk to Dan today. If you have any questions whatsoever for myself or Dan, please post them in the comments below. I'll also put in Dan's contact details there. And guys, look forward to talking to you again soon. Thanks.
Thanks, Rhyce.